All right, guys, this is Paul Singh, the market speculator with bullsonwallstreet.com. We've got this free weekly swing trade report, which we put out every week that I am not doing the live coffee and stocks with Paul. So we're doing that today. Three main things we're going to talk about today. One was the major talking points this week. Two, we're going to look at the energy sector and doing something that might surprise a few of you. That's considering shorting some of the names in this area. And then three, we're going to talk about a few stocks that look really interesting right now. So let's get to it. First of all, the three talking points. I think it was Tuesday or Wednesday, one of the big guys at JP Morgan, Diamond, came out, and the big soundbite was his comments on an economic hurricane that he expects to come. Goldman Sachs head honcho Walden came out the next day and said something very similar. Now, there were some guys who came out and said the opposite, but these were the ones that grabbed the headlines. You can see here, Diamond, brace yourselves for an economic hurricane. We've got Goldman's Waldron warning of unprecedented economic shocks, echoing Diamond. But look at what's interesting. These are some big names here from the biggest banks saying this. And look what the market did during this period. Essentially, here's the cues. The NASDAQ essentially stayed where it was. And yesterday actually popped quite a bit here. So the market held up very well after these comments were made, which was a little surprising. And then we had the jobs report today, or on Friday. And the job report was fantastic. It actually surprised. Payrolls rose 390,000 in May, better than expected. Companies keep hiring. You would think that would be a good thing, right? But this is the way the market's taking it. Good news is bad news, because what this does is it freaks everyone out that we're going to have more inflation because more people have jobs, and then the Fed's going to come in and raise interest rates. We already know that. I don't know why this is a big deal. It should be a good thing that people are getting jobs. But look what happened today. After that, usually when we get news like this, you would expect a big pop in the market. The market actually dropped some today. So those were the three big talking points this week. But I think the main point for us is ignore all this stuff. It means nothing. Follow the price action. And what is the price action telling us? Basically, this week was a consolidation week, right? And no good news, no bad news was going to change that. We had the low made here on this Friday, 520, when we got the hammer in. We flew higher, and we're basically consolidating some pretty decent gains. So a really nice bear market bounce. We're looking at the NASDAQ here. We could look at the SPY, and we essentially see the same thing. Consolidating here right under some major resistance. Now we want to see if that level breaks through. If it does, fantastic. We keep playing this bear market bounce. Those of you who follow me on the swing report or watch these weekly swings every week know we've been talking about this for a while now. We are in the midst of a bearish pattern, and our overall, say, intermediate term horizon, we are still bearish. But that doesn't mean we can't take longs, because we know in bear markets, sometimes we see very powerful bounces that we can play. And we're in the midst of that right now, and nothing has changed that at this point. But we want to see, do we stall at the 50-day and start to pull back? In that scenario, then we start establishing shorts. And that's the spot where you want to establish shorts in a bear market, is when a bounce starts to fail. And it has not failed yet. It is just consolidating at this point. So that's the game plan going into the week. No, we're in a bear market bounce. No, we've made a nice first move. Now we want to see indications. Do we keep climbing, or do we fail at this level and potentially start establishing shorts? So that's the news. That's the job report. Now let's talk a little about energy. Through all this, energy has still been on fire, which might be a little bit of a surprise, because what we've seen before is when the market starts to do a little better, energy was pulling back. But this time, as the market bounced, energy bounced strong as well. So energy is getting very extended. You can see XLE here. And there's that old theory, reversion to the mean, that these things don't go up forever, no matter how strong the area is. And what I like to do when I start seeing things being extended, of course, you can look at indicators, but I like to follow the price action and just look at, when you see a trend like this, Look at the space between the 50-day moving average and price action. And you see here historically, when we start to see that big gap forming between the 50 and price action, we get a pullback. Now we might get a continuation of the trend, but there is a pullback that can be potentially played as a short, and we might have that now. So XLE getting very extended. Over in the swing report, we actually have a list of names we are watching to potentially short. We're not jumping out in front of it and doing it now, but it is on watch. I'll just pull up one for you guys that we're watching here, and that is ESTE, ESTE, oil and gas E&P. And you can see here, this is even more extended than the ETF is. Oh, look at that. And look at the gap between the 50-day moving average, which was around somewhere in the 14s here, 1475, and prices getting close to 21 here, getting very extended. And we could potentially play a pullback. Even if the stock is going to eventually go higher, there is a potential short here. I'm not saying to go out and do it, but we should be watching for signals, and we have some specific short setups where we have entry triggers, and this one is definitely on watch right now. So that's what we're looking for with the energy sector. And now let's look at some stocks. Let's start with Zoom here. If we pull up Zoom, there is some interesting stuff going on with Zoom. One, of course, it's been beaten down, but notice here, since the top here, almost every let's take it since mid 2021, essentially every bounce to either the 90 EMA or the 50 has been a failure, a bear market bounce, and we get that next leg down. But for the first time now, we are actually getting a remount of the 50-day moving average and some consolidation here. It hasn't just failed right away. Not only that, look at the difference in character and volume. There's definitely some accumulation going on here. So Zoom is very interesting. There's some fundamental factors that we've been looking at too that are pretty good. But in terms of technical factors and price action and volume, Zoom is looking like maybe, just maybe, a short-term bottom is in here, and we could at least maybe play kind of a moving average sandwich, maybe 50 to 200-day moving average type play. So we're watching that one very closely. Big drug companies, Pfizer and Lilly, are looking really strong here. You can see here, Pfizer, while the market has been pulling back and been making lower lows, let's actually look at that, and you see SPY here. You can see here, lower, lower low, lower low, lower low. Pfizer has been making higher lows. It has pulled back with the market, but you can see here's a low here, here's a low here, here's a low here. That's the definition of a strong trend here, and this might be a good spot to think about an entry. Lilly, even stronger. You don't see those deep pullbacks in Lilly either. So these two stocks looking very strong. Now let's go to the big box retail, Target and Costco. These guys got crushed when it started to show that inflation was having an impact on the consumer. You can see the big gap down in Target when they warned, but has stabilized now. And sometimes when you get these big overreactions, once we fill the gap here, you can get a nice move within that gap. So we're going to be watching the remount of the 90 EMA and maybe this range right here around 168. I would say even the 90 EMA would be a pretty decent entry here. Costco looks very similar here. It's actually even showing more strength after the big gap down, and has already filled or went into this gap and is looking to actually did fill this gap here. And now we'll see if it can break through that level. So Target, Costco, there's a bunch of other retails we're watching, but these are two big ones here. Now defense is starting to wake up again, and let's look at LMT and NOC. Lockheed, you can see here, has been in a nice consolidation as the market has been pulling back. We know there are reasons defense, globally right now, defense stocks are strong. And you can see here, LMT had that big run up from about 324 to 442, so a little over a 100-point move. Of course, after 100-point move, you expect some consolidation. It has done that, and looks like it might be setting up here for the next leg higher. We can look at NOC, and we see something very similar, and actually it's even stronger. Finally, our last two stocks here. Let's look at some growth stocks, PLTR, not low float, but some growth stocks here. PLTR is actually below where it IPO'd. Big gap down. Maybe this is capitulation. We're starting to see some strength. I probably wouldn't touch this unless it could remount the 50-day moving average, but we are watching it. And then STNE had a nice breakout here over the 50-day moving average. Some good volume coming in, and maybe it has bottomed here. All right, so this should get you guys ready for the coming week. If you have any questions, shoot me an email. Of course, you can go on Bulls on Wall Street, go to the part-time swing trader service. Let me get this out of here. You can see where to go here, and you can join the swing trade report if you want. Otherwise, we will be back next weekend with the weekly swing.